Hi everyone. How's everyone doing today? Good turnaround Tuesday to everyone. Patrick, Arif, nice to meet you, Arif. John, everyone doing okay? Okay, so I have a few ideas. GM Luca, how are you, brother? Eric, nice to see you, meet you. What's great about this new community of faces, I'm getting to meet a lot of new people. And what's even greater is people I've known are still following me around. Can't get rid of you guys. I've gotten rid of a few of you. Anyway, I want to talk about the yen. Okay, I'm looking at a short-term chart here, 15-minute chart. I know that Blake still has a negative bias on the yen, and I see two drives developing here. Here's the first one, confirmed high. Here's the second one, diverging. I'm thinking there could be one more shot up towards 1240, 1250. I think that's where this line would come in the next hour or so. If you don't want to be perfect, you put a piece on here in case it rolls over from here. Steve Olge is looking for a correction in some of the euro crosses. I think that also involves the euro yen. This high that we had last night was not confirmed. I can't rule out another push up in euro yen, but starting to look heavy. And Aussie yen's been the weak sister. It already had a 3 drive to a top formation here from last night. We're already under this moving average. Maybe we get an ABC, but if we do get a rally back towards 40, 42, probably have a pretty tight stop on. So the reason I'm thinking short term and looking at micro charts is anything that I want to accomplish in the market today, I'd like to have it done by 5:30 Pacific time Friday. And also keep in mind there might be something to move the markets after the Fed statement today. Hello, hi Matt, how are you? Jason. So you don't have to agree with me, but I'd like to know if you understand the analysis and what I'm looking at here. Looking for reactions in the yen and a few of the crosses in the next 24 hours. So when I look at the yen, and I'm going to be patient and wait for one more high so I could have a third. Here's kind of like a target. I have some confluence here. I think I saw a tweet from Hardianto and then one from Dan Norberg where he was looking for a pullback to about 1050 or so. And I have the confluence of these moving averages here around 1080. So if I could see a peak here and a break towards under 111 prior to the NFP, I'm going to say thank you, trading gods. I'm going to the door. Let's see what the NFP does and let the markets reset. Okay. Thank you, Patrick. Also, you know how I look for confluence, right? I respect Greg Horvat's work. Here's a freebie for you guys that aren't subscribers. And you get this stuff from Greg all the time. So I do my own work first, and then I go to the different methodologies on ForexAnalytix and find who agrees with me. Then I look for someone that agrees with me. Okay, so if Greg agrees with me, that's good enough. I think Nick's a little more positive. Greg is positive. He's just looking for a wave too. So I think Hardianto also said This was a 5-wave advance completed. Are you here, Hardianto? Can you tell I pay attention to your tweets? Okay, so this is what I think can happen before the Fed meeting. I think, and if it doesn't happen before the Fed meeting and you're not stopped out, you don't stay. I mean the NFP, not the Fed meeting. You're already short from 1280. So you've been riding that a while. So those are my calls. That's what I'm seeing today. The next one is yours. So the 4-hour, we're diverging a little bit here, I believe. Let's see. 4-hour, yeah. Confirmed high here. We've been diverging for a while. The 1-hour, we're not. I believe the 1-hour still, yeah, see, well, 75, still a pretty heady reading. So here's 1170 and here's 1080 again on the 1-hour, 1080, under 111. Any questions on what I talked about? We have a great day trader with us for an interview today. Nathan Mahdi. I've known Nathan for how many years, Nathan? About 3 now. And I've witnessed him in action. He's a great scalper. Since the first LAR, because LAR almost went 3 years, you know. I don't know if you were there from the beginning, but I would say at least 2-3 years, right? So Nathan's going to be, yeah. So Nathan's going to be presenting. I'm going to be interviewing Nathan. And if that's your style, he can swing trade too, but I'd say the majority of his trading is anywhere from 24 to 72 hours in time duration. Is that correct, Nathan? Most of them, you know, day trades, big believer in booking partial profits, gives his trades tolerance at first on entry, and then tightens things up like a button right away. So let's see who's with me on the team today. Let's see who's with me. Let's see who's here. Let's see. Hey. We have both Steves.
Hey, Dale.
Hey, how are you? Yeah, so.
As well.
Hey guys, how are you today?
Very well,
Good.
thank you.
Spent a relaxing afternoon and evening together yesterday.
Yeah, you guys are like brothers.
With our families, just in case anybody thinks something else.
What?
No, you said that we spent with our families, not only the two of us.
Oh yeah. I've seen the photo evidence.
Indeed.
Yeah, both of these guys have beautiful families, very blessed. So, what are you seeing here, Steve? You hear my commentary on the end for, you know,
yes, I
that
did.
we could be into a zone.
I'm with you there. The initial reaction zone was 111.60, 111.70, 80 there, those 20 pips. We've already penetrated. Yeah. We had the 50-day moving average there. We had previous bottoms and tops.
Show your screen?
Yeah, sure.
Okay.
Sure, and there is a particular chart I want us to take a look at afterwards, after we look at the year.
Okay, well, you saw Grega's work on it, so Grega's kind of if you look at his work, it looks like, you know, you can't get the exact number from looking at the chart, but it looks like right around 1240 or so.
Yeah, Grega's whole idea, which I agree with, you know, Grega as in Elliottician, and that's one of the reasons I like Elliott waves. You can see my screen, right?
Yeah.
Okay, this is the USD yen.
Yeah. Yeah.
There was absolutely no doubt that this was an impulsive move higher. Okay, we can break it down in legs, etc. In elite wave, it doesn't matter. Then we had a corrective move lower. Why do we call it a corrective? Because obviously when you have such a large move higher, you should first approach any move lower as a corrective move, especially since we found support at 50% fib, if I remember right, because it's been some time since I had that fib here. Then we had what seemed to be like we bottomed out at a very regular fashion. I mean, the momentum went down, then we had a triangle, then we broke out of the triangle, and we had a clean 5-way move higher. And what Greg is seeing here, I'm pretty sure, is A, B, C.
Yeah.
And now he expects that we're going to have 1, 2, 3, 4, etc. And, you know, very probably even new highs. From a basic technical perspective, I was seeing this zone here. I expected that we might get some reaction here because this would be a confirmation for me along with a break of the channel that we are moving higher. So I mean, from a basic technical perspective, I'm looking more or less the same thing like Greg is expecting. For example, that...
Do you think it's a consensus view for higher US dollar yen? Do you think that the majority of people want to be long the yen, not short the yen, US, well, you know, the way it's paired up, long USD yen? Do you think that's the consensus or contrarian?
I'll tell you, that is a very, very, very good question, actually. So let's have a look at it.
Are you used to it by now?
I'll tell you. Yeah. I'm definitely used to it. I mean, you always ask a good question. What I wanted to say is the following. It used to be 100% consensus view. There was no question about it. Nowadays, I've seen way more people than I would expect looking. Let's look at this. Japanese yen. Do you see this?
Yeah.
This is the DSI. As you see, the sentiment at the moment
neutral
is a completely neutral.
Yeah.
Of course, this is not positioning. This is sentiment. I also use it in combination with the COTs. But what I wanted to say is that I think that more or less the opinions are cut in half at the moment, which means that I do not think that from a perspective of positioning or sentiment, there is a barrier to move higher. I mean, the boat is not tilted.
There's no one to squeeze or liquidate out here.
Exactly. From what you see, Greg is expecting that we're soon going to have a pullback for a wave 2, which can be shallow or deeper. It can be as deep as, for example, filling the gap, and usually that's what he's looking for. So in essence, that would very likely manifest itself in a basic technical perspective as a first rejection from the channel, a move lower, and then the second test of the channel would be a breakout. So this is a very likely outcome of this. Do I want to be short? If I was a scalper, yes, sure. I think this is not a bad place to be short if you're willing to put your stop loss above the channel, because we might have an event tomorrow, for example, with the FOMC. We might have a false breakout, then a reversal, then everybody's going to be like, oh, we had a false breakout, this thing is bearish, and until they figure out that that's just a pullback, everybody's going to be on the wrong side of the boat. You know what I mean?
Mm-hmm.
So this is, for me, there's
well, I know that Blake's a fundamentalist and a technician. What's his rationale for being, like he says, he only wants to play the short side again until we break out, like over 113, the story's changing. But what's his rationale for being bearish yen? It's kind of a bias. He has a bias, right?
Yes. He's long. He's mostly looking for the long side of the yen because I think deep down he mostly believes that the situation.
There's going to be an S&P correction.
Yes, the situation with stocks. Yeah.
All right. Well, that's a great lead-in because put up your weekly yen chart now, because no one talks about this count anymore. Okay, you're going to show NASDAQ, but let me open your eyes to, just something I want to show you, and
there you go.
All the face guys.
There you go.
Look at a weekly. Yeah, bring it back a little bit. It's too scrunched. But anyway, that first break that we had from 125 to 100, see that? That could be A.
B,
Down.
C.
Yeah.
I mean,
Yeah. That could take you, equality would take you to like 92. And no
Yes.
one's talking about that happening. So, I mean, if there is some type of summer, you know, mini panic or something in S&Ps, I think that kind of plays out. And the bonds will blow again to the upside. But I know where Greg is at right now, looking for,
I'll
you know,
tell you.
a big... Go ahead.
Look, I think why Greg thinks that most probably this is, I mean, I'm trying to get in his shoes now, which is not correct, but let me play the advocate of the devil here, okay?
Okay, go ahead.
We've had a corrective move that took us.
Hold on, man, hold on. You can't be the devil's, it's too spooky for me.
I'll tell you a story at night so you can go to bed without worrying about it. Don't worry. Okay,
Yeah.
so we've had a correction that was 22%, took us 22% lower. I'm not talking about a 22% retracement. I'm talking about a 22% move lower the USD yen, which lasted for, if you see, until the actual bottom, it was 55 bars. That means 55 weeks. Okay, because those are weekly bars, because we're at the weekly.
Yeah.
And if you actually count this consolidation period until the election low, which mostly was, let's say, a bottoming formation, that took 75 weekly bars. So the question is, from a time perspective and an extent of move perspective, it's not unthinkable to believe. I mean, it's more than likely to think that, yeah, okay, this was an adequate period of time to correct a move higher, and an adequate retracement, because as you see, this was a little bit more than the 50% retracement.
Yeah.
So
if I could see that. I could see that. And if the bond rally's over and one of our members, Luca, has been, you know, shorted that rally in bonds, I think, last week, and Greg is talking about a wave 5 to the downside in bonds, that would be US dollar yen positive.
Definitely, but we can have a look at the bonds as well. But let me show you something that I was looking actually today out of curiosity, because let me give you my grand thesis here having to do with stocks. No matter what they say, I have absolutely zero doubt that we're currently in a bubble that is still inflating, okay? From a fundamental perspective, they can give you a lot of explanations, etc. But let's be honest, the big part of this rally is based on multiple expansions, okay? I mean, and which always means that the expectations are for a brighter future. So actually that stocks and indexes in, you know, in...
so you have it labeled as a 5 coming up here.
Yes, but that doesn't mean it's a 5 of, you know, of the whole thing. I mean, it might...
No, it could be Peter Goldstein. Remember, it's one of the first interviews we had.
Oh, yes, of course, I remember Peter. It was a very interesting interview, actually.
And I said to him, well, you know, and he's thinking that this 5 is 5 of 3. And then we get like, a big four down to, you know, 1950.
It is likely. It is likely because somebody...
and he said right after earnings season, I said, what's your best guess? He says, after earnings season, I think this is the last week of earnings season.
It is likely. I can tell you one thing for sure. I'm not a stock trader, but I am a person that notices things in charts. And, you know, those guide me. I mean, anyhow, from a fundamentals perspective, I don't need to know that if they put a gun on your head and told you, would you be buying NASDAQ here to hold for 1 year? You would be crazy to do so.
Yeah.
You would be crazy, completely crazy. I mean,
we are diverging. This is a daily chart.
Yeah, we are diverging, but we're still at overbought levels. We were diverging and we broke out. This was the confirmation, actually, that we were going for a new high. I'm seeing a very clean
But it
five-wave
didn't take out the previous RSI high though.
No, it hasn't. But this is not very reliable divergence. When both readings are overbought or oversold, you can't call it as much as a reliable divergence. But what I can tell you for sure is the fact is the following. We had, let's zoom out a lot. We had the financial crisis low here in November 2008. This was not actually the low in NASDAQ, but because, as you know very well, the low in NASDAQ was after the 99 crash, which was actually at lower levels. But okay, let's disregard that and let's.
I forgot that.
Yeah, let's take it from here. Okay, I have a 250 daily moving average. At another moment, I remember having this conversation with you because you asked me about my moving averages, and I told you that I keep the 200 DMA because it often plays a role, as support. Look at this. Look at it here, as support or resistance in charts. But because it's also a slow moving average, and the 51 because it's a rather faster one. It's not considered to be a fast one. People use 20 DMA for a fast moving average.
Right.
But noticing how a slow moving average with a moderate to fast moving average move with each other gives you a lot of information. So I was looking at this huge gap between the 50 DMA and the 200 DMA today, and I drew this line so I can actually get, an idea of the length. And then I took this and started moving it.
Average.
Yeah, and then started moving the distance back in time.
Yeah.
And I can tell you as a fact that since the lows of the crash, there is no period in time that the distance of the two has been so large as it is today.
Yeah.
Which means the following thing. After bottoming out 8.5 years ago and being in a wild uptrend during a period of 8.5 years, which historically speaking is a larger period than the average expansion of any business, not of any business, from the average business cycle.
Or even bull markets.
Yeah, we've actually accelerated the most after going from 1,000 to 5.6K.
Yeah.
To me, this starts smelling like the mania phase that Gregor was talking about.
Yeah. Well, they say markets top with violence and bottom in silence.
Yes,
and it's definitely been a violent rally.
Yeah, so just to give more specific targets, I extended wave 1 of this part of the move with wave 5. As you see, I get a level of 5,685. We also have the channel here. Personally, I will be looking for a reversal. Now, it's a bigger conversation to have if this reversal is going to be a wave 4 or whatever, but I can tell you one thing. This kind of momentum at such a mature phase of the cycle is unsustainable.
Mm-hmm. Okay.
Okay, so that's...
Okay, so you heard it from Steve Volge-Prector here that, and Steve, so if this scenario manifests, we're not going to have new highs in US dollar yen over 125.
Probably not, as you understand. Probably not. I mean, a lot of other things will have to happen so the USD yen does not take a plunge. But judging from regular correlations, etc., no, that's unlikely. So that's the thing that troubles me. I mean, I see the same thing Gregor sees here, but I don't see how. I mean, the only way the markets, the equity markets can play ball with this scenario in the USD yen is a really full-blown mania phase. You know what I mean? Like seeing this parabolic move extend for a couple of months, 3 months or whatever. This is the only thing that can sustain this. But that's going to be devastating for, because you know how it is. The bigger they are, the harder they fall. Yeah. More or less it goes for equities when they're so overblown. I mean, the faster it keeps moving higher, the tumble is going to be bigger and more massive, and you know how it is. Then when people start unwinding positions, it's going to be a massacre, and I doubt that even the Fed will be able to do much to save the situation. But that doesn't mean that can happen imminently. I mean, we might have a phase that we just steam off by spending time oscillating. For example, let's look what happened here in the correction we had, in the prolonged correction in Nasdaq, for example. Look at this. We topped in July 2015, and then basically until July 2016, for a whole year, we more or less did nothing. We corrected lower, we moved higher, we corrected lower, we moved higher. So for a year we did nothing. So overbought conditions in this case were resolved by spending time in a wide range. So perhaps we do something like that once more again, and then we move for fresh highs. This has been, if you remember, which was the...
Yeah, so you're saying you never know whether it's going to be a correction in price where you start
or in time
levels or in time. Right.
Yes.
Last one was time. So if the alternating rule works, this one should be in price.
Yes,
that's
but
my guess.
and also let me add to that.
Yeah.
From the election low to today, within roughly 100 days, we've had a 24% increase in the price of Nasdaq. 24%.
Yeah,
I mean, that would count as a magnificent year at the early stages of a bull market after being in very oversold conditions. And now we're getting it so late in the mature phase.
So we probably peak, this week Facebook and Apple release. So that could put in the high. They beat the numbers. Just like Amazon in the aftermarket last week was up like $80-90 and ended up closing only up about $5 on the day. So someone came in and sold those earnings on Amazon.
Yeah, obviously, because a move such as this, as you understand, creates an opportunity.
It's basically three stocks, the whole thing, it's really Amazon and Apple and forgot who the other one, maybe Facebook. I mean, the market cap is so concentrated in a lot of these stocks that they're what's keeping up the market.
Yes, definitely. But Nasdaq has been extremely wild.
Yeah.
I mean, somebody could say, but if you choose, why would you choose to go with Nasdaq since it's the strongest one? Simply because, as I told you the other time, I see a clean pattern here. I see a channel, I see a 5-wave up, and I see this
great look, Steve. Yeah, great look.
Yeah, so I'm monitoring Nasdaq. I mean, there is obviously no reversal candle yet.
Well, maybe if rates go up this time, the market doesn't like it because maybe the bonds. That's the only scenario I could see U.S. dollar yen doing well is with a weak bond market, and then rates head up like Luca's looking for, and then people have to reassess valuations based upon higher interest rates.
What can really help is if it proves, as currently expected, which is early, that the second quarter GDP is going to be strong. And it looks likely that we might have a very strong second quarter GDP reading after a very weak, though I have to say, first quarter and fourth quarter of last year readings. This could fuel the market's expectation that perhaps the Fed is going to go through and is going to deliver the expected rate hikes. And at some point, yes. How did you say it the previous time? Every 3 rate hikes a tumble. How did you call that?
Yeah, it was three steps and a stumble.
Yeah, 3 steps and a stumble. Yeah.
Yeah.
So let's have a look.
I have a bond
bonds.
chart. Okay, let's see yours because I have one from Luca. And he's been shorting balloons, I believe. Is that correct, Luca? Is it a balloon chart?
Yeah, you remember we had a look. Yeah. Let me start, since you mentioned it. Let me start by the bond. You remember?
He got that retrace he was looking for up there.
You remember when I show you this huge head and shoulder potential?
Yeah.
And we had this, we had a very nice confluence, we got rejected, we reached the bottom of the channel, boop, gap up, correction higher. I'm with Lucas here. I mean, I consider this zone around 162 to 163 critical. As long as we stay below it, I have absolutely no reason to be bullish.
That was a great entry, Luca. Everyone congratulate Luca. I think he did it at 163, 164.
That
correct,
was excellent. Because we had this zone here, we had the 200 DMA. I mean, the 200 DMA once more, worked like a charm. We also had, what was it, the 61.8. I don't remember now because I've removed it. It doesn't matter anymore. But as you see on the way down, we got, for the time being, rejected from the 61.8 from this move. So for the time being, we're mostly oscillating. But I also, if I had to bet, I would be selling strength here.
Okay. So maybe we get a pop here in the buns with a little pullback in yen.
But let's have a look.
I think we've got it cased.
Yep. And let's have a look at the ZN. ZN, it's the 10-year treasury, right? The continuous one. We had a double bottom in what can be interpreted as an ABC move. So, for example, this move can definitely be corrective. As you see, we tested one of the plenty of trend lines that come here almost, and we almost reached the 38.2, but we're currently sitting just right on this.
Yeah, it looks a lot like the TLT chart, and I thought that we had a chance to rally back to like 129, 130 before it was over.
Of course, and start something. We're still holding at a decent zone. I mean, it's not impossible to have another move higher. I mean, from a technical perspective, this thing is not broken yet to the downside, but a break below here will start making things, really dangerous for the bulls, because this will look like a false breakout of this trend line. And then the deeper we go, especially if we go below 124.19 or whatever, the trend will point once again lower to fresh lows. So yes, if you look at this, I would say that the higher likelihood is that the bonds will also make another move lower.
So they go lower and the stock market continues to blow off until they bottom.
As I told you,
could happen too.
In the short term, I see that Nasdaq is extremely overextended, but that doesn't mean anything. We might easily see more months of a mania phase or a correction or whatever. I know one thing for sure: I'm going to be selling Nasdaq soon. I don't know for how long that's going to be. I'm going to judge by looking at how the technical picture evolves after it starts correcting. But it's bound to give us some kind of a correction for all the reasons I mentioned before.
Great analysis, Steve Volge. Everyone, that's Steve Volge, @Volge on Twitter. You guys have all our Twitter handles? In fact,
they can also find them on the homepage if they wish.
Oh, okay, because you know what? I'd appreciate it if you guys just tweeted your reaction to the community in my stream by doing a mention. These other guys, they're not Twitter addicts like I am. But if you want to say, I'm in face and, it's boring, or Dale interrupts people too much, or I'm really learning a lot, it's really a
positive. Or Dale is awesome.
Huh?
Or Dale is awesome.
Oh, yeah. If you want to go ahead and make me blush, you could compliment me. So, because you know what? This is a free room, and I guarantee you there are a lot of people out there that are getting chewed up by sharks and barracudas that could use our help. So that's one way to let the public know that we're here. So, you tweet your reaction because, people are buying all kinds of bull on the internet, that they could retire with a $5,000 account.
Yeah, in their dreams.
Oh, yeah. Why doesn't Dale show up as one of the team? It's being redesigned.
The new design that Dale is actually there is already complete, but we're waiting for some last touches to be put tonight from the developers, so we can actually update the homepage with it, Dale.
It's because I'm on parole. Excuse me, probation. Parole is a Freudian slip. I'm on probation.
And actually, to prove the point, here is
there I am.
Here is finally,
hey guys,
the server, and here's Dale.
They finally made me a cartoon. Always thought my life was kind of a cartoon, and now I am. Okay.
Aren't we all?
So I think I'm gonna. Yeah, can I live?
Dale, one last thing. I need to remind to people that despite crude looking like a piece of garbage, we are still holding both the horizontal zone and the ascending trend line. So I would not write off oil just yet. And actually, this is not the place to be selling it anymore. You sold it up there at the resistance. Perfect. You did awesome. Selling it down
here. It's actually
here,
a pretty good risk reward to buy it in risk 47.
No questions asked. I need to reiterate here that when we say that something is a good risk reward to buy it, it doesn't mean that if you buy it, you're going to make money. It means that if you buy an equivalent setup 10 times, you'll probably make money 3-4 times out of 10, but you'll make way more than you will risk losing, and that's the whole concept. This is let's say a 50% or lower probability setup that can yield though risk rewards higher than 3 to 1, 4 to 1, 5 to 1. So you do the maths and you understand why it's good. Also, I wanted to show the medals because what they're doing with the medals is consistent. I mean, Stelios can tell you his opinion about that as well. He's seen it happen over and over again. But
well, you know, it did complete a pattern. When Stelios was on yesterday, there was a pattern that was looking for 1685 in silver, and that's exactly where it went to. It even took it out.
I think I need to.
Someone had I think it was Nick's. 1685 was a harmonic pattern or something.
Yeah, and here we go. Look at today's candle. Actually, look at this. First of all, let me say the following. I really don't like what they're doing with metals. I'm absolutely sure they're manipulating it. I'm not a gold bug or a metal bug. What I'm going to say has nothing to do if I believe from a macroeconomic perspective that they should go higher or lower. It simply has to do with the way they're trading. I mean, somebody found value buying silver down here at the retest of the channel and buying it for a huge number of consecutive days with just, you know, a few neutral days. And then somebody a little bit higher thought that it's a good idea to be selling the metal for 11 out of the past 12 days. And look at today's.
I think you called these stop hunts. So they took out the buy stops. Now they took out the sell stops.
Yeah, look at this.
That was their game. That was
look at today's candle. It's ridiculous. I mean, it's
call the police. Call the trading police.
Not even a Greek bank's stock wouldn't be trading like this. And we're talking about a metal, you know, being used in production, etc., etc., etc. It's
yeah. Hey, I saw you out there protesting. I think it was in Athens, and some policeman had you in a headlock yesterday.
Of course. Every single day I'm in the police department. I have nothing.
You were there at May Day celebration with all your communist Greek friends out there.
Of course.
If I may add something, one thing. Sorry, guys.
You were there too, Stelios, weren't you?
Well, I'm always there.
You guys are agitators, huh?
Absolutely. If I may add one more thing, is that the price action that we see on precious metals, especially on silver, you see volumes being sold, you know, big size being sold without looking at the actual price. So what I mean is, say you've got, you know, $1 billion worth to sell. They go in, they sell it in one go, they take out 10 levels below and make the maximum price effect they can. At least that's what it looks like. So, you know, if I
Yeah.
was somebody who have a...
At the most liquid times of day, very often.
Exactly.
Right?
Yeah,
Yeah,
it's a rate.
like bank holidays and, you know, Asian trading and all that. And if I had a big position to sell, which I have had in the past when I was working for the bank, you know, you pick your time, you do it in a nice way, quietly if you can. You don't just go in there and smack the hell out of it. You know, it just looks weird when you see this happening. So what is their objective? Are they trying to put on a legitimate position, or are they trying to take out stops? Like Dale very, very correctly said, it's a massive stop hunt. So, you know,
Guys
it makes
and
you
girls,
think.
when Stelios
You know
tells
what?
you that, I need to remind you that Stelios was working for...
It's as old as time. You know, it used to be happening in trading rings and trading pits, and now it happens with black boxes. But
Yeah.
And Dale, if you ask Stelios what's the biggest position he's ever moved, what was it, Stelios?
Okay, it was a short-term swap, but it was about 30 billion pounds in one ticket. So it was a
So
big
he
ticket.
knows
But
what he's talking about.
it was a short duration ticket, but still not a small ticket. So
yeah, yeah, that's a lot of pounds, man.
yeah.
All right,
But,
well,
you know, yeah,
then maybe that was it. Little ABC, it's completed, and maybe the metals are good now. They got all the longs out, unless they take out that low at 1560 or so.
Today's candle is sick, though. I mean, from a perspective, I mean, if we close around here and we let this huge wick form, that's definitely not a bearish
good.
candle, especially considering the serious selling pressure that we went through now. I mean, for example, let me tell you that, because as Blake has said many times on the webinar, you always need to put your position in the other person's shoes. Okay, yourself in the other person's shoes. Let's say you were a seller and you sold here and you did very well and it went lower and lower and lower and lower and lower. And after being in profit, you see this candle. What are you going to do with your positions, Dale?
You're going to cover your short.
Exactly. And what will that create to the price action?
Right, buying.
Exactly.
If I may add one more thing, sorry, I just saw a comment by Pedro saying that you know, silver industrial demand has been weakening. That, you know, it's a fair point. You know, its demand has weakened since the peak of, you know, the latter part of last decade. But there are new areas which is keeping demand pretty strong. Like, for example, okay, we've got silver being used in mobile phones, in solar panels. Now you've got a huge opening where silver is being used more and more in the health industry, you know, and so demand for silver, I think, for physical silver will always be there. It's never going to just die down, although, you know, Pedro is right, it has weakened a little bit, but in the long term, I think it's something that's going to be very strong because of its industrial demand, because of all these applications, and obviously because it's considered to be a monetary metal and all the other parts. Just a clarification. We do understand, you know, the cycles of how demand and supply of silver and the other commodities work. It's just that I think it's something that's going to eventually keep going, and demand is going to be strong. That's my opinion.
And also don't forget that every market, and we're not talking now about financial markets, I mean any marketable item has a passive way of readjusting demand and supply. I mean it's basic microeconomy.
Yeah.
When you have more demand, you get more profits for the suppliers, so more people are interested to join in the supply side. That balances the pressures of the price to go higher. Then when demand gets reduced, the exact opposite happens. The profits for the suppliers drop. Some of them drop out of the race, drop out of the industry. Less are left to extract, for example, in this case, the metal. So they have more power over the price. And this is how you balance demand and supply in any kind of market. By the way, there is a friend that asked about gold, and he said that it's hard to trade if we find it like, you know, that the case is this. I can say that actually the rejection from the trend line was, I mean, textbook. We got rejected from the huge multi-year trend line, which was a great risk-reward play to be short there. and we broke below the breakout point here at 1260, but as long as this zone that has the 50 DMA, the 200 DMA, which is around 1,245 to 1,250, and the ascending channel hold, there is actually no signal to say, okay, that's it, gold is going to be destroyed. Obviously, somebody can mention here that if the bearish thesis about the treasuries plays out, which means that yields go up because they're usually inversely correlated, you can expect a move lower for gold. And yes, for sure. But do I yet have the technical confirmation that gold is gone? No, not by any stretch of the means.
You will.
Very likely, Dale. And when I see this, I'm going to position myself accordingly. For the time being, I'm neutral and monitoring very closely.
Yeah. I think Pinkert didn't like silver at, I forgot even the level we were at up there a couple of weeks ago. So,
yes.
And there were reasons, you know, I mean, there were reasons, there were all kinds of divergences up there. So,
and don't
you know, not all divergences work, but, you know, gold kept going up, and silver just kept struggling. And, you know, you always sell the weak sister and you buy the strength. I didn't short gold. I liked the short side.
You're absolutely right, and that was a great recommendation.
You know, that's the old relative strength. I mean, you could have learned that in Investors Business Daily, that newspaper from, you know, 20 years ago.
Yeah. Just look at the zone that rejected us, Dale. One rejected here, two since 2013, 3, 4, 5, 6.
Yeah, Nick saw it too up there. I think Nick saw it too, and I think that was her harmonic to 1680. Yeah. So you know, that's what's cool about FA. There's difference of opinions. You know.
Yeah,
I mean,
but you know something.
And it's based upon time frames too.
Yes, but if you monitor closely now that you've been with us for some time, whenever the opinions of more than 3 or 4 analysis confluence and they agree that it's bearish or bullish, our hit rate is amazing. Because you know that's the magnificent thing about confluencing. When every type of analysis or almost every type of analysis tells you, okay, this thing is going lower, the chances of a high of a high probability trade are of a successful trade are very high because you actually have a high probability trade.
Okay, I have to take a break before my interview with Nathan. Are you guys? Is that a wrap up? And I did want to show Lucas a couple of charts before I went, but
of course, go ahead and show the charts.
But thank you, Steve's plural, for your analysis today.
Actually, we have the same name. It's Stelios and Stelios, but we had to do it Steve and Stelios because people get confused, as you understand.
And actually, that NASDAQ look was really interesting. Really interesting, Steve. So it looks like the yen's coming off now. That may have been it. Anyway, I want to show what Luca had in the bonds before I go and take a break prior to the interview. Stick around for Mystic FX. He's going to demystify day trading for you.
I'm definitely looking forward to it. I'm going to be here listening.
Yeah, I've watched Mystic trade for a while. Let's see. This should be Luca's look. Okay, so here's Luca's look on the one. Oh, this is 10-year. Okay, so we pulled back here. It's really kind of a shallow pullback. And he's saying that we would have to get under 215 for it to continue lower. It almost looks like an ABC flag here, doesn't it, Steve? And then so this would line up with what Greg is saying, that this is a 4 with a 5 to come could, you know, take us up to 3% on the 10-year. Interesting. Nice look, Luca. I think there was someone else had a look. Okay. I think it was on the Kiwi. Yeah. Yeah. Thank you, Ronit. Luca, very nice look. I think it was Hasselhoff had something. think it was Kiwi, right? And then we'll take a break and stick around for Nathan. So we're lucky to get great looks from the community, you know, surrounded by very good traders. Everyone in here, you know, I know a lot of the members that are here that I've watched trade for periods of years. They're better than me. Surround yourself with traders better than yourself and you'll rise to their level. So that's been a philosophy of mine. So this is Hasselhoff's look here, saying that this was a rejection at the 38%. So obviously bearish. Nice look, Hasselhoff. Couldn't you have had a different first name, or did that make it easier for you to remember your second name? Hasselhoff, Hasselhoff? Okay. Don't hassle me, Hasselhoff. All right. All right. I'm going to play the commercial for everybody. Oh, you got your baby's trade got stopped out.
It seems that you're bringing them too young.
You're on. We can hear you, buddy. Hello, Mystic. Oh, okay.
He says he needs 1 minute.
Yeah. All right. Shy. Now I made him the executive. All right. Is that Gartman? Why is everyone so down on Gartman? It's a commodity king. Oh, the baby came in?
Did you say comedy king or a commodity king?
They call him the commodity king on CNBC.
Yeah, okay.
So why are you laughing?
He's the absolute contrarian indicator, probably.
A lot, yeah, a lot of people say that. This happened to him, Nitish? Okay. It's tough being famous. I know. People are asking me for autographs everywhere I go. I can't go out with my wife without being bothered by the public. It's so tough being a famous guy, isn't it? How about for you guys in Greece? I know you guys are pretty famous over there.
What do you mean, Dale?
Hi, Nathan. How are you, buddy? Father first, trader second. That's what I say.
You got it. Can you hear me fine?
Yeah, hi, Nathan. How are you, buddy?
Good. That's what happens when your wife says, hang on 1 minute. I just need to go to the bathroom. And yeah.
Yeah, that's okay. That's okay. Look, that's what you trade for. Now, anyway, right? Before it was just for you in the old days, right?
Mostly. And
Okay.
yeah.
Now you're a family guy. So you know what I have to say to you, my
What's
good
that?
friend?
What's
Use
that?
more leverage.
That's a good way to blow your account.
Instead of using less, use more leverage. So you can share your screen, buddy, and then
Okay,
we could have visuals here.
All right, let's start doing this again. Let's figure this out.
Just share screen up there on top.
Show your screen. Gotcha.
Yeah.
that's webcam. Click to start screen
It's
share.
underneath. Yeah. There we go. So you're showing an investing.com site, correct?
Okay, perfect.
And you're showing potash.
Potash, yeah. Okay, great. Okay, so everybody can see my screen now. The only thing is I may be interrupted in about 5 minutes for a bit. I may have to stop for a bit, but I'll be right back within a few minutes if I have to. Most likely not.
Okay.
And
so I've kind of given the community a description of what you do and how long I've been watching you.
okay, right.
Not stalking, but watching you. You know, you've been pretty loyal to me and followed me around. And, you know, you are one of the better day trading scalping guys that I've watched trade.
Yeah,
I thought it'd be great for people that like to do it.
Yeah, for sure. I appreciate you kind of sharing that. If you want, well, I kind of made a little bit of a trading presentation here. If you
beautiful PowerPoint.
At some point kind of go through it to, you know,
All right.
kind of have the ideas sort of streamlined, and then just some things that I sort of like talking about. This is the second time we do this, right, Dale?
Yeah.
So, you know, I can kind of go over several things there from that presentation, and at the end, if you want questions or whatever. But yeah, I guess I should tell you guys a bit about myself. I started trading. The reason I pull up this chart, this Potash Corporation chart, is I'm not sure if I've told you this story, Dale. So I started trading around here sometime in 2008, and I started trading stocks is how I started.
Right.
And the reason I started was I put some money, you know, as a young man, I put some money together sometime here in 2008, and I started looking at the stock market, and I basically put it in a mutual fund. And Potash was one of the stocks essentially that I was looking at the time. And as it went up, I noticed my mutual fund was just kind of lingering, sort of. So around this time here, I put some money together and said, well, if, you know, the mutual fund is doing terrible and Potash can do this, and I'm a smart guy, I know my support and resistance. I've read one or two books, you know.
Yeah.
I bet you I can do this too, sort of thing. So I bought it somewhere around here, and that happened. So that was my trial by fire in trading. So that was, of course, the market correction. What's that, sorry?
Everyone's been there.
Absolutely. And that's kind of the point of the story.
Yeah.
We all eventually in our journey, in our trading journey, will go through something like this. So then I stopped trading for a while because I destroyed my account. Then put some more money together. And then, of course, you see it starting to go up again. And like a noob trader, I think I entered Potash again, and this sort of thing happened. So anyway, eventually I got interested in Forex. Then around 2013, I guess, is when I really started understanding what I'm doing. So it took me a while. I guess some people do it quicker. And
how long, Mystic? I mean, let's just skip this, you know, your initial experience of, you know, coming into a very unusual time of a financial collapse.
Yeah.
But once you started going into Forex and that became your mainstay, I'm sure it still took some time, and I'm curious how long it took before you started getting results.
Yeah, so I mean, in terms of results, success, I think that there's all depends on what you call success. I mean, you know what I'm saying? But to me, when I think of a trader has achieved a form of success, for me, it's consistent. Like, I've had runs where I'll do amazing and then I'll do really bad. And in the past, and for me, success is when you essentially could have lower volatility in your account, and you can have some type of predictability, if you know, and you can sort of actually make a living. You know, you're not riding a roller coaster anymore, and you can start
consistency.
Yeah, consistency. That to me is when you start achieving success. So for me, it took I would say at least 3 years in Forex, plus multiple years that I had done stocks. Do you see what I mean? So since
So
2008,
like going to college and maybe getting a graduate degree.
100%. And that's the thing, you know, you're kind of going into some things I wanted to talk about, but one of the thing is you can't just come into this and think you're going against the best in the world. You're going against people who do this day in, day out. This is what they do. They don't just come here and say, oh, you know, I'll just think I like the way this looks and I'll buy it. So anyhow, shall we get into this?
Sure.
Yeah, so I guess right off the bat, you know, you got to do this boring thing.
Yeah.
But it is necessary, Dale. I think you agree.
Yeah. Sure.
So I'll, you know, I don't like beating around the bush, and, you know, basically the truth is there's no encompassing statement to accurately disclose every risk in Forex and the whole trade chain. So what I mean is somewhere between when you click the button and between where your broker executes it, a whole bunch of things can go wrong, okay? So you can lose your whole account, whether you trade and you make an oopsie, or your broker can go broke, especially if they're not regulated. A whole bunch of things are at play that you should be aware of, and obviously you worked hard for your money, I hope, so don't just come and start playing with it. It's not a game, right? And you don't want to blow an account. I've done it. I've blown 2 accounts before, and it hurts a lot, so don't do it. And the final thing I just want to add in there is essentially what I'm going to be showing here is how, based on my years of interacting with the Forex market and learning and seeing what makes sense for me and discarding what does not make sense for me, this is what makes sense. This is the way I see the market. So, for example, I know there's a lot of Elliotticians out there, and for me, that never clicked with me. Now, at the end of the day, if you achieve consistency, and that's the end goal, no volatility and consistency. If you can do that, I don't care how you do it, multiple ways to skin a cat, so to speak. And how you do it is up to you. But what I'm saying here is if this kind of jives with you and works with you as a attendee or person watching this, then great. If not, then I hope you get something out of it. And it's just another way that may not work for you, but it is what works for me. So just a quick thing there. Basically, the presentation, I'm going to try to keep it useful for kind of like the newer trader, and hopefully have some stuff in there that even, you know, the most advanced and accomplished traders can kind of get something out of it. And I'm going into this thinking that the audience has a basic understanding of, you know, support, resistance, trend lines, that sort of thing. So I think most people have that. And here's how I looked when I started trading, and I'm probably somewhere in here now. And Dale is, you don't have Dale here, he's here. So, to that level eventually. Couple things to go over is why people are attracted to trading Forex. Essentially, I mean, it comes down to several things, right? Money. Maybe you just like your current job. You'd like to set your own work hours, be your own boss. Maybe you've seen that ad or many of the mini ads on YouTube, you know, trading on the global exchange market at any time, anywhere, or whatever the ad is. I don't remember what the newest one is. And so you're thinking maybe it would be a very good lifestyle.
Yeah, don't drink screwdrivers and trade like that guy, or even drive a boat. But I'm just assuming there's vodka in that glass. But go ahead, Mike.
So we go from this to straight to these are just some things that I'd like to kind of put out there and kind of lay a foundation before I get into what I do. But this is a lot of this. I want to present a couple things that I wish I had seen when I started. So for the newer traders or traders who are learning, and a true and sobering fact is that you must have heard it. You know, something like 95% of Forex traders basically go broke or lose money, and I like empirical and scientific evidence. So you know, a proper statistical study. So one that I have seen is the...
I have a question for you, Mystic. Sure. Why are you so concerned about the compliance aspect of this presentation about, you know, people could lose and this and that. I think it's pretty much a foregone conclusion that most people hear it all the time. So I'm just, do you have any kind of compliance or regulator that you have to report to about, you know, these disclaimers that you're?
Oh, no, I don't. No, I don't.
Okay.
No.
All right. You just want to bring out buyer beware to people.
Well, buyer beware, and I want buyer beware, and to some extent, I want people to know really what they're getting into. So what I mean is, like, when I, for example, blew my first account, I lost a good amount of money. So don't go into this putting a lot of money. That's all.
Okay.
Don't go into this putting a lot of money before you really know what you're doing, I guess, is kind of
Okay.
the end.
Okay. So let's just assume that most people that are here in FaZe know that.
Awesome.
Okay, and I think a lot of people in FaZe do know this. So why don't we get to the
Let's get to it.
the market trading aspect of it.
Let's do it. So I like
Cool.
simplicity. I like simplicity in my trading. I like to keep it simple. So for example, with me, you'll never see charts like this. All right. But also I want to put out there that if it's obvious, then it's obviously wrong. Right. And I think Joseph Granville, people, right, someone that said this. And, you know, to some extent, if you look at how the Forex market works, as long as it is a decentralized market structure. So how do who takes part in the Forex market? I mean, we need to understand the market before we start to trade it, correct? And I mean, the people that take part in this Forex market, the people who essentially move it are going to be, to some extent, high wealth private individuals, international businesses, funds that transfer money to, let's say, a fund that wants to, a fund from Europe that wants to invest in a North American market will transfer funds. And they will all be basically clients of some type of bank, put liquidity into that bank, and price will move as it seeks that liquidity. So as an example, let's say, start pulling up some charts and look at some stuff. And this is a yen. I'll talk more about this later. But let's say you are and this is how my understanding of how the market moves is. And essentially, when I understand, based on my understanding, based on my model, is how I trade. So let's say here we have a 45-minute chart on the right. On the left, we have a 1-minute chart. So we're going to just use an example here, okay? A hypothetical example. A bank trader who is a client of, let's say, it doesn't matter, let's say Microsoft. Okay, Microsoft will have a business, essentially relationship with, let's say,
to lay off currency risk, or speculate.
Sure. What I want to say is the majority of participants are actually not in the market like us for the purpose that we're doing. They're in the market to conduct transactions. Manage currency risk, actually conduct transactions. So an example of how the market will seek liquidity, and I believe we're speaking about this just earlier in terms of stop runs, and as you know, that's one of the things that I like to do. I like to play with stop runs. And what we have here is, let's say, again, like say Microsoft wants to build a factory in the US, or it doesn't matter. They want to transfer dollar for yen for some reason. They go to their bank, to their bank that's going to conduct that transaction for them. They're going to give them a range. So basically, you know, we want to move, let's say, $2 billion within X amount of whatever, X amount of pips. That bank trader is going to affect that transaction where they see that the price here is at let's say 111.50, let's say here at this particular moment, or let's say right here, so 111.40. we have to understand that price will look for liquidity, and there is going to be a certain amount of liquidity there. As that bank starts to put liquidity through, let's say they want to sell the dollar, that's their ultimate goal. They need to fill that position. To do that, they need to find a liquidity area, and that is often areas where basically stops exist, let's say above this high. It's a daily high, but that's where you will see essentially these huge moves. And Dale, I think you've seen me get into these quite often.
Yes.
And of course, price essentially smacks right back down. Once they fill their position, they sell into these sort of moves. So it may not take much to get price up here into a high liquidity area. They sell and fill in their position. We're going to talk about this quite a bit as I go along. A framework for success, a quick little thing, and then I'm going to get into basically how I see the market. Equity management, I mean, if you're a new trader, that's going to be the thing that's going to keep you safe. Psychology of the market, I mean, understand that you will take losses and never live trade outside a proper trade plan. But when you want to make a trade plan, you have to have an edge. And in my opinion, you must have an edge in the market. So what I mean by this is it's a understood price behavior that's statistically proven, okay? And when you want to test your edge, you got to make sure that you address confirmation bias. So by confirmation bias, what I mean is you can't, as an example, you can't go right to left. You can't cherry pick examples of what you see works in the past. You got to go left to right properly and test your edge. And I'll demonstrate all this. The final thing is you want to bridge the theoretical gap, meaning you want to test under real life trading conditions. And that's what I do when I came up with my method. But what I'm trying to say is with, for example, confirmation bias is you don't want to, as an example, go back in time and say, you know, go from right to left. So meaning you don't want to swipe this way and say, oh, look, in this case, the market, the trend line, like trend lines work, right? You're cherry picking this example. Our mind looks for patterns. You need to swipe left to right and make sure that you have a statistical edge, that over it happens. So this is how I work.
Supply demand traders would say look left for their levels.
Absolutely. What I'm more talking about there is when you want to, for example, do historical trading and plan, like prove that your method works. Don't be going this way and looking at and cherry picking examples, right? What I'm trying to say is you're right. When you're doing supply demand, absolutely. You're going to look at levels to your left. So anyhow, I'll get right in. This is essentially how I trade. I like to trade price action. A lot of my trading essentially a lot of my learning came from Chris Lurie, if you know who he is. But I like to look at price action. And if you look at this simple chart, it's a 5-minute chart of the Euro futures. Essentially, it will follow the Euro spot. If you look at this point right here with my mouse where it's showing, at this very instant in time, this is a snapshot of available liquidity. So when you look at the market, below the market, there's a certain amount of liquidity. Above the market, where the current market price is, there's a certain amount of liquidity. What essentially, to the core, causes price to move is seeking of liquidity. As these areas, so for example, at this particular price, where the price is 111.42, above it, at 111.43, we have 7 contracts of liquidity. Now this is, again, futures, so you have exact volume data, but spot will follow it more or less similarly. It's a microcosm for spot. Spot is about 10 times, they say, larger, but it's a microcosm. Below the market, there's about 13 contracts within 1 pip at this particular instant in time. So if I was to come in and hypothetically want to sell 100 contracts, price will move, assuming nobody else is entering at that instant, it will go through 442, and I'll consume those 13 contracts. It'll go down through 41. I'll consume the other 84, and I'll end somewhere at 1140. This
Great point.
This micro analysis of how price moves right down to the pip is essentially how I essentially look at it in a larger view and how price will move on a larger scale. So as long as we understand that this is, when you see price, if you go in and you say we want to buy whatever, $1 million and exchange it for a euro. The point is, what is the liquidity? And your price will move according to that liquidity. So here's an anatomy of the price move. It's this fractal where price moves that I like to trade. So here on this side of the chart, we have an area of volume stability, okay? So you see that price will consolidate, and we see this all the time. The market consolidates the majority of the time, and I call that an area of volume stability where price consolidates. Now, as that happens, eventually a surge comes in, okay? So for a stimulus of some sort, so again, it could be something as simple as news. It could be something like a market participant, a large market participant has come in and would like to, for some reason, buy this particular currency up and exchange it for a reason. It could be a Boeing manufacturing company that has decided to repatriate euros and is going to buy the euro. It doesn't matter. The point is, you go from an area of volume stability, and here you have a chart of market depth, and you start consuming liquidity. And as you buy up, you have more bids coming in than this area where you have, let's say, 2s and 3s coming in. So, let's say 7 contracts come in, 3 come up, 10 get sold, 3 come up, 5 get bought. All of a sudden, you have this bid surge. What happens in the market when a big amount of buying or selling, but in this case buying, comes in, is all the engines and all the pricing engines in most of the banks see that. They essentially react to this instantaneously. No bank wants to get caught essentially with 30, 40, and of course this 30, 40, these are arbitrary numbers. These are arbitrary numbers just to illustrate this point. They don't want to get caught up in this move and be holding this the wrong side. So very often you'll see, before something like this happens, if you study the market, you'll notice that price will begin to spread. Okay, that's where you see price spreading. So the euro will go from very, very tight liquid conditions, let's say zero spread, 0.1 spread, and all of a sudden will start spreading to a pip or so. Okay, that spread is essentially bank pricing engines adjusting and ensuring that they have enough room to get rid of whatever liquidity they provide. Anyhow, so as that surge comes in, you have these buyers coming in, buying up liquidity. There's a bit of a pause. More, there's a bit of a pause. More, and then this bid surge is essentially over. That meaning the liquidity consumption over. You end up standing with a move that looks like this. Now, what happens here, and this is where I insert under certain conditions, under certain support resistance and other things that I look for, will look to enter. I fade these moves. So many people have said, for example, well, I see you're a counter trend trader. I don't trade counter trend. It's more that I understand that when this happens, you have a void left behind. You have a good liquidity base here. A surge that removes price from a good liquidity base, where price here, let's say this is on the bid side, the last bids were here, then meaning a good solid amount of liquidity. And then all of a sudden you have a surge. Well, what happens is you have a bit of a void left behind here, where once that surge is over, price starts to drop, not on sellers, but on exhaustion. And that is what I look essentially for. This fractal repeats itself over and over and over. And what I will do Some of these charts are from an old presentation, so you know, they're a bit dated, but they illustrate the point very well. Now, what you have here on the right is dollar franc spot 1 minute chart. We're looking down to the 1 minute. What I have is the exact same chart on the left, and it's the franc dollar futures. Okay, so it's inverted, but it's the same thing. Now, the reason I have this here is that when you look at the spot market, sometimes when you look here, down here at volume and range, it doesn't paint a very exact picture, a very clear picture of what's happening. Okay, so what we're going to do is we're going to use this futures chart to the left as a microcosm. What you have, and this is me demonstrating this principle here, is you have a period of volume stability over here. For the most part, the market is consolidating. You have some bids coming in, some offers, and price just consolidates. And as you look at it here, you have a little bit of volume just coming in, no big deal. And the average is about 28 contracts. So a contract is 100,000 of the base unit. Okay, so you have 100,000 contracts coming in per minute. This data is provided by the CME, where they have the futures exchange. Now, a stimulus enters the market, whatever the stimulus may be. It starts to drive price down. And as you can see, you go from something like 28 contracts a minute to 560 contracts a minute. Okay, you have more than close to a 20-fold amount of liquidity coming in. The reason I point this out is you don't really see it here in Forex. You don't see it in spot. Okay, but what is happening is a huge amount of volume is coming in. The reason you don't see it in spot, of course, is that these things count ticks. Okay, it doesn't count actual volume. So as this bid surge, this offer surge in this case comes in, okay, it comes in, it exhausts itself here. So again, price consolidation, offer surge, and we go back to a time of normalcy over here. Okay, we go back to normal calm volume. What happens here is, notwithstanding another influence, price will seek out, and so I'm going to switch to this chart now because I do trade on spot mostly. Price will seek out and go back to the last point, where the initiation point. That is where you have, again, you'll have good liquidity, and you'll basically draw back into that void. Now, this thing happens on multiple time frames on every currency. Here we have the pound, and you see the same sort of thing. And we're looking at a 2-minute chart, and we'll just go up the time frames, and I'll show you this sort of thing happening over and over. So you have an area of price stability, where price is relatively stable. You have calm, quiet market, no real stimulus coming in. You then have an offer surge. Okay. In this case, we had two. We had one this come down here, and it comes back, draws back into liquidity, and another one, an offer surge, and right back into liquidity. So these are your exhaustion areas. And essentially price, again, notwithstanding another influence, and of course, the areas that we look for these sort of things, that I look for these sort of things, is very particular under very particular parameters. But I will look for price to draw back in, and I will ride it back up.
What are the volume spikes part of realizing you're ready for an exhaustion phase to recover and move in the opposite direction?
100% it is.
Because I noticed them near the lows. That was your highest volume point down there.
100% it is, Dale. So I mentioned earlier that I don't really follow Elliott wave, and again, this is not at all a slight to any other method. This is just what clicks with me. I looked at a lot of different things, and this is what clicks with me. The reason is, at the end of the day, regardless of what you use in the market, you will have three, no matter who you are, you will have three base pieces of information, unless, of course, you have insider information. The three pieces of information are time, volume, and price. Everything else at the end of the day is extracted from that. So if you have some type of volume analysis, you will use base price for that analysis. If you use stochastics or RSI or any other information, it basically extracts and produces that curve, that stochastic curve, from price, from what price is doing. And finally, you have time, how fast price does something, okay? So to me, I look at those three principles and them only, and that's why if you look at my charts, I don't have a crazy weird indicator. And again, this is not to say that you can't use indicators. Absolutely, I look at moving averages, and I do look at RSI when price is ranging, and I look at moving averages when price is trending, okay? But at the end of the day, I look at three pieces of information: price, volume, and time. Now, this thing, you alluded to the volume. It does in fact blow off, and I do look for a blow off. Essentially, and these are terms that I've kind of come up with, but I want to see an offer blow off. I want to see it end and no longer continue to go down. That is, and again, you've seen me entering, you've alluded to it, I use very tight stops. The reason is because I'm sure that price should turn here. If it doesn't, I'm wrong, and I want to be wrong small, right? I don't want to leave a large stop loss. So I'll just show a couple more examples of this on 2 more time frames, and then I guess I'll show you some of these live examples that I called when we were in LAR, and then I'll show you some of the examples that I look at recently. So again, you have volume stability. So this is a 5-minute chart, and you have relative volume stability. You then end up in a bid surge. The bid surge ends on high volume, and you have a liquidity void. Essentially, you have a last area where there was a good amount of liquidity. Price was harmonious. You had a lot of dealing happening here, and then this pop. When you see this pop, this is somebody who came in or as a bunch of entities that came in and filled their positions. However, this does not mean that the whole market liquidity, not all the market's liquidity actually traveled up here. You will have an area of base liquidity back here. And as you see, when price fills these liquidity voids, okay, it does it small, like meaning in small ranges, the actual candles are kind of small, and it finds stability here. And again, from here, you can then go on, whether price moves up, moves down, but basically up until, from here on in, it will essentially move into the next price action fractal. So what we're looking is for price action fractals. So if you see this one here, it's the same thing because it is a fractal. You have it on multiple time frames. It's a small one, but you have a spike back into the liquidity relative to this time frame. What I want is action fractals that are large that I can take advantage of, right? Where I can enter and have very favorable risk to reward. So again, if you look at this example here, as price blows off here and ends and you have range contraction, you can enter in this area. A stop loss very tight, and you're going to look for price to drop back down into the liquidity zone, at which point I will take partial profit, but a larger profit. I essentially exit the majority of my trade, if not the whole thing. The only time I hold is if I expect for some reason, if it's a trend, if I'm entering in a trend, I'll basically hold a tad bit, but I do always pay myself for my efforts. That's, I always try to make sure I take something out. Finally, a 60-minute chart, and you see it here. I've kind of highlighted it, but you have the same sort of things. Like I'll look at this one. You'll have a general price stability, surge, and of course on the higher time frame, it will take longer for it to come back in. A surge into a level. Now here, and this is again, when I'm wrong, I like to be very honest about it. If I entered here, I most likely would have got stopped out here. And that's just the way the market goes. It's not perfect, right? But you see price draw back in. Again, surges and price dropping back into this line being the liquidity zone, right? And it happens in both directions, and it happens on all time frames. over and over. So the goal is for us to essentially locate an area, or for me when I trade, is to locate an area where I expect something like this to happen. And when you said, for example, supply demand, like for example, we know just trade supply demand.
Right.
I essentially look for stuff like this into a supply demand zone, and I enter without a confirmation. And I will show some live examples of why I do that. I'll go over these old ones. But I'm not sure if you remember this one, Dale. This one was a live one when I did a presentation, and it happened live when I was doing the presentation with you. Do you remember that one?
Yeah. You know, in fact, we're running over here, buddy. You know, I had another appointment set up for
somebody else. All right.
Yeah,
we're about over. We're about
right.
over. Yeah.
All right. Well, I really appreciate. I'm sorry that I didn't know how long it was going to run.
It's all good.
All right. But, I really appreciate you coming on and sharing your stuff, and hope that when you're in here in face, you put out some of your ideas and charts for us, because
I'll start doing that.
They do definitely add value, and I'm glad that I've gotten to know you through FX and consider you a friend of mine. So thanks for taking the time, buddy.
No problem, Dale. You're right back at you. All right, everyone. I hope you got something out of that. Maybe not much, but I hope you got something.
Oh yeah, they liked it. Robert liked it. You got some compliments here, buddy.
Thanks.
So
all right.
Thank you so much, Midas. And thank you, everybody. That's going to be a wrap for me. And just a quick look at what's happening in the market. U.S. dollar yen still may get this chance tomorrow. Let's see what the Fed does. But those are my ideas. Thank you, everyone, for your attention today. And I'll see everyone tomorrow. Thank you, Steve Volge, and Stelios, thank you, and Blake, I hope you feel better, and Face guys, yeah. Thank you, Ronan. Okay, adios, everyone.